Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers. I'm here with Chris Bates from the Flint Group. Batesy, how's it going?
Going well, Pete. It's, middle of November, late November now. My boy had his third birthday party at our house on Sunday, which was big success, to be honest. He said he didn't want a party, and then after the party, he said, "That was a great party, Dad." And that was really nice, watching him sort of have his third birthday. He's still scared of candles, which is the poor thing. He got a bit scared from the fire. We couldn't decide whether it was in Bali or Thailand from those fire twirlers, and he's scared of flames, to be honest. But yeah, my stepdad got out of hospital this week. So he had that freak accident about almost 2 months ago now, and has been in hospital the whole time. So that's been a huge moment for our family because it's been a long journey for him. So I'm going up to Newcastle this weekend with the kids to see him. So what have you been up to, Pete?
Yeah, I almost texted you on the weekend actually to see whether you survived the birthday party. Yeah, we actually had a play date sleepover as well, so it's pretty hectic here for a few days. Yeah, not much sleep going on from what I could tell, but yeah, it's good. We got the kids out to the zoo, and we had got the paddle boards out. So yeah, I guess it's as you said, it's the year's kind of whisked away from us, and before you know it, people are talking about the Christmas break. And yeah, I think just in general, I think Sunshine Coast, I think people's minds are turning towards the break, and property market conditions actually seem quite a bit softer now. Not so many people looking to buy. Brisbane's still ticking along though, and we've probably missed out on 3 or 4 auctions over the past week or two. So it's still not easy buying conditions in Brizzy, but maybe just things have softened in the coastal markets a little bit. That's been pretty much it for me this week.
Yeah, it's been an interesting week for us, to be honest. Maybe the last couple of weeks we didn't think we'd have too many purchases, but there's been a lot of transactions in the last couple of weeks. And a lot of clients have been able to snap properties up. And, with 30-day settlements, the pitch is that you've got very motivated sellers, right? Now, every seller wants to get their property off the market before Christmas. It goes pretty stale pretty quick in January. It gets a bad smell. You have to sometimes take it off the market to then relaunch it. And, buyers have already seen it before, et cetera. So it's not a great outcome, particularly if you're paying for styling and you're not getting any rental income, and maybe you need to sell it for because you already bought something. So sometimes a time where sellers are very motivated, agents without doubt are motivated, right? They're getting no new listings, so they're just trying to clear the decks, right? They got rid of all the good stuff selling, right, or has been sold, and then they've got some stuff that's motivated vendors. So for their mind, they just want to get the deal done. They want to go and have a break. And I think everyone's exhausted again, at the end of the year, like they, usually are. And so motivated vendors and motivated agents. And I do think there's obviously motivated buyers, because they have missed out and they do want to secure something because they're not sure how things are going to go next year and sentiment can shift. And so buyers are absolutely not. They're still patient. They're still picky. The ones that have still got the energy right now and aren't losing are willing to commit their Saturdays, even though they've probably still got Christmas parties they have to attend and things like that. We've seen some offers that are 30-day settlements, 28, even less than 28-day settlements that that's been the key difference maker. And I've been surprised just, how many sales have happened in the last couple of weeks and purchases for clients. I'm not sure. Doesn't sound like you've seen too much of the same up in Brisbane, but we can definitely feel that down here.
Yeah, we keep getting outbid. So we would
that's interesting.
We would like to get some more deals done. But we're still getting a steady trickle through there. But I think the problem in Brisbane for the whole year has been trying to find quality A-grade stock. And when you do find it, of course, everybody else is looking at the same properties. Even in a relatively big capital city, there's only so many good properties around and a lot of competition, I suppose. What else has been happening this week? Just flicking through the news, I was interested to see Commonwealth Bank's share price hitting an all-time high, $156, up over 50 over the year. So obviously the banks are enjoying the sort of higher interest rates, improving their margins. I saw the ABS state accounts this week, and it showed how households have been paying. Well, a couple of years ago, they were paying $46 billion of interest. Well, now it's well over 100. So huge increase in the amount of dollars being sucked out of the economy by the bank. So obviously, great news if you're a shareholder in the banks, and a lot of handsome dividends coming your way. But of course, it's squeezing households, and you can just see that retailers are struggling. A lot of people are cutting back. It might be it'd be interesting to see how the Black Friday sales go this year. It seems like they're being advertised very hard, but I think a lot of people are just cutting back generally on their expenditure in the retail side of the economy.
I do have to admit, I'm a bit of a bargain shopper, so I do like my Black Friday sales, getting things that I know I'm going to have to buy in the future. I mean, it's interesting you say that. I mean, I did some with the sort of the CBA share price, because I did some sort of consulting this week with an investment bank. I've been doing this stuff for years where, they'll get interested parties from around the world that want to understand the mortgage market here and the property market and the banking system in particular, because it's so interlinked, right? Well, by understanding the mortgage market and the property market, they can get some good indications on what's going to happen to bank share prices, particularly when you look at things like mortgage flows and how brokers are liking different banks. And we had a big chat around sort of bank share prices. And he made a comment. This is a hedge fund manager from the US that JP Morgan, I think, was trading at 12 times and CBA was 28 times. They don't quote me on those multiples, but in their mind, they just don't get the multiples of the CBA share price, right? And they just don't get that. They think it's highly overvalued. But that doesn't mean it's not going to go down. That doesn't mean it's not going to keep going up. But that was an interesting comment when overseas people look at the Australian banking system and just feel it's completely overpriced.
Well, it's interesting, isn't it? Like yourself, I've done some consulting for hedge funds over the years, and as soon as you see the size of some of the hedge funds that come to you, the multi-billion-dollar funds, kind of straight away who they're looking at, because there's only so many banks, I suppose, with enough liquidity to make it worth their while. And I would assume if you're looking at bank share prices at the moment, you'd be looking on the short side. Because, I mean, I guess if you look at, there's different ways, of course, you can value a bank. But, CBA would have to be up there as one of the most expensive banks in the world. If you're looking at price-earnings ratios, price to book, it's really expensive. What does it reflect? Yes, people are paying more for the same amount of profits. But I suppose, looking forward, we've got big population growth. I expect maybe, as you talked about last week, I think banks are going to start getting more creative and trying to lend more next year. It looks like, although mortgage arrears have risen a bit, very few defaults, very little in the way of foreclosure. And there's a lot of money goes into superannuation in Australia, which just keeps on pumping the share price. But full disclosure, I had some Commonwealth Bank shares for years and years, and then of course sold them. I won't tell you what price, but it was lower than $156. Let's put it that way. So disappointing in some ways, but I suppose in the end you don't go broke backing winners. But so you're probably asking the wrong person, because I sold too early.
I thought it was going to be a Renee Rivkin moment, pump and dump, a bit of pumping the stock price up by Pete to a few thousand listeners here that are listening, but doesn't sound. I did find another interesting thing. I mean, he was based in New York, and I couldn't help myself just while we were setting up for the meeting. Sending some questions his way, right? And what's the feeling in the US? What do people feel about the Trump situation? And and he is in New York, and he said it's not usually. He just said that it's quite positive. There's been a huge swing in the voting compared to the last Trump election. The cost of living crisis and people's self-interest is a lot more driving people's actions. And it's not as divided probably as it was the last time. And I think people are feeling quite positive, on the economy over the next few years under Trump. And so that's an interesting one, right? And and he's kind of pointed out this the big swings around the country, how it's really surprised people, and it's good to always look at different sides to the story, right? And while you might not agree on certain things, but I think the overall consensus in the US is they're quite positive about what's to come in the next 4 years. And
could be a vibe shift, couldn't it? I suppose if there's a bit more deregulation, maybe a bit more efficiency through the government, maybe less focus on DEI and more focus on meritocracy. I mean, those things are generally thought to be good for capitalism and profits. And as you said, a lot of that would be self-interest. But I mean, it's. I think one of the big things has been the clarity that it wasn't an election that dragged on for weeks and months.
Yeah.
And at least it's kind of a done deal. So at least people can look forward with some more level of certainty than would have been the case a couple of weeks ago. So, so we crack on with our 3 news stories of the week for what's happening in Australia then. So, firstly, let's have a look. National Australia Bank put out their forecast for property prices in 2025. So, interesting, at the same time they pushed out this release, they also pushed out their rate cut call from February to July. So, a couple of different, almost conflicting pieces of news. I suppose if you look at generally what they're expecting, it's cooler price growth projected for 2025 across most capital cities. I think, but I suppose the one standout there is they're expecting price growth for Melbourne 3.3%, whereas in 2024, Melbourne was really the one capital city that went backwards a little bit. So obviously they're expecting Melbourne to kickstart a recovery. Do you? I know you guys look at this on your other podcasts. Do you pay much attention to these forecasts, or do you think they're just usually too wrong to be worthy of taking any note?
I do think they're interesting to see why they think certain parts of the country will perform better than others, but don't hold on to the numbers too much. I mean, as we were just quickly getting ready for today, I said, let's just have a look at 2023 and what they said just a year ago. And they got Sydney right. I think they said, it'd be about 5%. It was 4%. They said it'd be around 5% in Melbourne, but it was actually -2%. So they got Melbourne wrong quite bad. They said Brisbane would be 6%, but it was 12%. So they really underestimated the lack of listings in Brisbane and how strong price growth would be. They said Adelaide would be 6%. It was 14%. Similar, they've really underestimated the investor impact into Adelaide market. And even under higher interest rates, Perth, they got completely wrong. I mean, they were very positive on Perth. They said about 12%, but 6%. Actually, no, it's only 6%, and it was 21%. So, I mean, if you listened to NAB 12 months ago, you'd be like, well, maybe I should have gone a bit harder in Perth, because it was, and they weren't too far off on Hobart, to be honest. They actually said there'd be no growth, and there pretty much was zero growth as well. So they kind of got Hobart and Sydney right, but probably got the other 4 capitals wrong. And so do take them with a bit of a grain of salt. I've done lots of stuff with the elephant, like you said, on the Full & Forecaster report, and and it's not just NAB, it's every single bank, it's every single economist, it's every single, it's really hard to predict property markets, and a lot of it's hot air. There's just too many variables in it. I do like what Louis Christopher does at SQM. He's just going to be as bad as every other forecaster. It's just so difficult. But what I do like that Louis does is he does do different scenarios, and he does put a lot more commentary around, well, if this happened and this happened and then this happened, then this is the rough scenario we're expecting. But if this happened and this happened and this happened, and why I like it is that it sort of shows that, if one card falls down, then another card will fall down, then another card will fall down. So that, multiple level thinking, while it's still fraught with danger, I do think that doesn't allow you to just get, okay, it could be 4, but it could be 2 to 10 in Sydney next year based on all these different variables. And so that's my take on forecast, Pete. I mean, but they are always interesting to sort of see what people are thinking. But they're often extremely wrong.
I think I actually featured in the Full & Forecaster report maybe a year or 2 ago. I think the subject was almost certainly interest rates, because if you remember when the cash rate target was stuck at 0, a lot of people were predicting that it might get up to 1.5%, but money markets were going looking for, I think, 3.3% over the 18 months. And it massively overshot. It was like 4.35. So, yeah, I wouldn't have been Robinson Crusoe there. But it does show, just how difficult it can be to forecast. I mean, you can take some of these NAB forecasts, and we'll put a link in the notes there so you can check them out for yourself. But when they're making a forecast to a decimal point or a decimal place, it is a bit of a false precision. And I guess you could argue in some ways it would be easier to make a 10-year price forecast for a capital city than a 1 year because the demand in a market can change much more quickly than the supply does. And as we've seen with Perth this year, forecast of 6% growth, and it was nearly 22. So it's a pretty big margin of error when you look at it that way. And the decimal point is really an illusion of precision. I think maybe it's easier to make a long range forecast sometimes with real estate than a short term one.
Yeah, I mean, I do like reading the bank reports because while the forecasts are, only a small section on it, they do comment on lots of other things in the property market. The percentage of, new buyers, foreign buyers, investors, because they do get access to, big data pools, the banks that I wish I could access them as well too. I like the Westpac one particularly, where they sort of the time to buy index and the consumer confidence and things like that, because if these numbers are tracked over time, you can really see how they play into the markets and how overconfident people are for, say, in property markets. So my favorite graph over the last few years is absolutely rate expectations and how that moves up and down over the last couple of years. Where we think rates are going is moving around like a yo-yo. Like, even September, rate cuts were coming this year. Now we're in November and they're not coming till July. A month ago, they were coming in March. In February next year, they could be May, or it could be 2026. So, I think that has a huge impact. The expectations on when rate cuts are coming and how big they're going to be has a huge impact on sentiment in property markets. And I think that's, at the moment, a bit like a yo-yo, hence why people are in and out of the market.
I think you're very, very right on that. So, let's take a look at this second story of the week. So, the stamp duty cuts for Victoria, which we flagged maybe a few weeks ago, have now come into effect in October. So, effective October 1, stamp duty was reduced in Victoria for all off-the-plan units, townhouses, apartments. So, there's still, workforce shortages. There might be a bit of a constraint on construction, but I guess overall, this should boost the construction of housing in Melbourne and Victoria. So I guess if you're not familiar, I mean, previously there was a stamp duty concession for off-the-plan purchases for first home buyers and owner-occupiers with price caps at 550K and 750K. But now, under these changes, the concession's now expanded. So anybody buying off the plan, whether that's an owner-occupier or an investor, for the next 12 months, there's a stamp duty concession with no price cap. And it's also permitted, there's a 100% deduction for remaining construction and refurb costs when you're calculating the stamp duty due. So it looks to me like, just looking at the Housing Industry Association figures this week, I mean, these are noisy numbers, of course, month to month, and especially at the state level, but 26.5% increase in new home sales in Victoria. So, I mean, that could be coincidental, but it looks like probably people are taking up this opportunity to buy new homes or off-the-plan units, townhouses, apartments. So I guess if you project that forward, this is going to be in place for 12 months. This, I think, Chris, should lead to a bit of a surge in construction of new housing for Melbourne and Victoria.
I think it does, but there was an article that literally came out last night on the AFR, which is why new apartments don't sell and old ones do. And I think it was a really interesting article because it talks about Pace, a developer, and basically saying that, it can't sell all its developments because the cost to buy their new stuff is actually more expensive than the existing stuff in the marketplace. And for them to make a profit, they need to sell it at a much higher square meter rate, which basically doesn't make the project stack up. And so, I get that this has actually shown more sales, but I don't know whether that's going to be the affordable part of the market. I think it's going to be a lot of the luxury sky homes that typically in Melbourne, for say, I think it'll be targeting the affluent downsizer or the maybe the expat or the downsizer that wants to travel a lot, they lock up and leave, or they're in a house. And that's a good thing, because ultimately we need to get people out of houses and get them into apartments at the older generation, so we can free up our housing stock for the next generation who need that space more potentially than they do. It's not about me trying to say as you get older you have to leave your home, but we need to create a system that encourages that. And so, I do think a no cap on stamp duty, even if you're not a first home buyer and you're a downsizer, I do think that's a good move in Melbourne. And if that can get more people to leave their homes into apartments, and yes, they may not be targeting the affordable part of the market, but they are freeing up housing stock and that when you free up the housing stock, then you allow someone to free up the apartment that a first home buyer can enter, right? And so I do think you need to create movement somewhere, and I think it's a good policy.
I think this will be a really interesting thing to watch over the next year, because if you look at what the Department of Families, Fairness and Housing showed over the 12 months to 30 June 2024, this is a piece of prop track analysis, there were 21,712 fewer rental properties in Victoria. So I guess those figures go back about 25 years to 1999. And it's the first time that there's been an active or a reduction in the number of active rental bonds. So in plain English, investors are selling in Victoria. I think Stuart Weems did a little piece of analysis on LinkedIn, which I'll link to in the notes. Victoria increased land tax by 31% in FY 2024 and payroll tax by 29%, which is an extra $4 billion in taxes. So you can see what's driven this. A lot of investors have taken the opportunity to sell up in Melbourne and Victoria. But I suppose the interesting thing to make, Chris, is that the rental vacancy rate in Victoria or in Melbourne is no lower than it would have been potentially otherwise. It's 1.7%. So that suggests, at least so far, the investors selling has been that stock has been taken up by first home buyers or owner occupiers. And the rental market is tight, but it's not actually as tight as some of the other capital cities. So I suppose the longer this goes on, the more interesting it will be to watch, because I suppose there's always this debate: if an investor sells, does it reduce? Well, it does reduce the rental stock, but does that property just get taken up by a first home buyer? Do we end up with a rental shortage or not? And so far, it seems that Melbourne's not faring any worse than anywhere else from a rental market point of view.
Yeah, I do think there's a little bit of people leaving Melbourne. It's lost its mojo. People going to the regions. The return to work's been a bit slower down there. Maybe there's and I think Melbourne always had very low yields and a good number of properties for renters down there. And so, there was always talk of an oversupply of apartments in Melbourne. And it's pretty crazy what you can rent houses for down in Melbourne as well versus, say, other capital cities. And so, maybe it's not right now. If investors bail, then it doesn't really impact the rental market, because renters still feel like they've got choice and they're not forced to stay in homes and the competition's not crazy. But, I do think that is a ticking time bomb. If you keep making it anti-investor down there, new apartments don't get out of the ground because investors can't afford to buy them. Every year and if you do see that more and more people can't afford to buy houses because the property market runs on them, then you're going to create this glut of people that need to rent. And there's going to be less rental properties every year, particularly because Melbourne's got very strong population growth due to its desirability to live, but also huge communities from around the world that and employment opportunities in Melbourne. So, I think they're playing with fire, to be honest, Pete, down there. I think it might not feel like a big problem today, but, easily 5 years down the line, that you go, hang on a sec, now we've got a rental crisis and we've got a housing affordability crisis because property prices have run. They're going to go, oh, hang on a sec, maybe we shouldn't have been as hard on the investors.
Well, there was a piece in the Fin Review this week, which we'll link to. David Harrison from Charter Hall said, if they're calling this a housing crisis now, what are they going to call it in 5 or 10 years' time?
Yeah.
Because we're not addressing the shortage. And he said this could even now spill over into a shortage of retail space, commercial industrial space, we're still running pretty high population growth. But construction insolvencies up over the sort of period July to November still rising, and we had a lull during the pandemic, but yeah, I mean that's 3,000 developers taken out of the market in a year. So it's a big number, and it's not abated. It's still going up. So I guess this feeds into our third and final story for the week. Leith Van Onselen, a macro business, a decade of housing supply nonsense. So Leith highlights that all the way back in 2015, Joe Hockey said we need to build more housing. The solution for Australia's property market is simply to build more. And I guess we did get that sort of almost half-decade building boom. At the very peak of the market, we got nearly 224,000 dwelling completions a few years ago now. But it later transpired, and we saw all the Four Corners episodes and all of that stuff. About half of new units in New South Wales had serious defects. The average cost per apartment building was $340,000. I suppose Leith's argument here is that despite all of that, this enormous construction boom that we got, if you went back 2015 and 16, and yet here we are in 2024, and we're back in a shortage again, and it seems like we're almost doomed to repeat what happened in the previous cycle. So there's going to be a big push for new units and new apartment projects, but I suppose I guess the previous cycle would show you need to be a little bit careful when buying new or off the plan, because a high rate of defects. And if we're going to try and build 1.2 million new dwellings in 5 years, we'll need to basically shatter all previous records. And I suppose there'll be something of an incentive to cut corners, I suppose.
Yeah, I wonder if we're going to see more of the pressure to, if investors don't buy them, do governments, even in just the AFR today, there's talk about the Future Fund, and, do they start allocating that to housing? Do they start trying to get more super money in there? And so, yeah, is it trying to find new pools? If the investors don't want to take these risks with off the plan, do the governments and super funds start to pick up the lag? What do you think there, Pete?
Yeah, I mean, this is literally hot off the press this morning, but the Future Fund is potentially going to invest more in renewables projects and housing. Previously, I suppose the mandate was more expected to be towards maximising returns, but potentially the Future Fund could be directed to invest in more housing. Governments could get more interventionist. I think, more to the point, I think with the election looming in maybe, let's say, 4 months' time or 5 months maybe, I think it looks increasingly like the opposition is going to probably run on bigger cuts to things like migration caps, student enrolment. So I think the coalition's been very quiet generally over the past year or two. They're looking for ways to differentiate themselves from the government. And I suppose this is an obvious point because everybody's feeling the population pressures at the moment, not just in the housing market, it's in traffic, it's in hospital appointment times and things like that. And it seems like an obvious point for the opposition to run on is, Labor promised to bring down immigration and hasn't. We can do that for you. So, I mean, whether or not the cuts actually flow through is a different question, but it seems like this will be probably one of the main topics for the election this time around.
Do you think it's a bit of hot air, Pete? Do you think they really changed the migration numbers too much? Aren't they sort of hamstrung in terms of what we need?
They could change the permanent migration cap. It's been flexed up and down before, but I think one of the things is that a big driver of population growth is actually via the temporary entrance visa holders. And if you look at those numbers, we had 2.8 million in September. Some of that's visitors, and you'd expect that holiday makers. But if you strip out those figures, it's still 2.5 million, and it's up 164,000 or 8% from a year earlier. We've got student numbers, student visas, 720,000. I mean, even though you can cut the permanent migration cap, but it's probably at least as important what goes on with the temporary visas. Yes, I mean, if you went back over since the start of the mining boom, there's been lots of talk about population policy changes, but actually, if you look at the sheer rate of population growth over that time, it's been strong throughout, and we've still only got an unemployment rate of 4.1%.
Yeah, one of the little points here on your notes here, Pete, was around the housing affordability index, which is what PropTrack, the REA group, put together, and lowest on record in terms of housing affordability. And we absolutely are seeing this, and I do feel for clients, because if you think about what it takes to enter the market, particularly if you think about Sydney, Melbourne not so much. I think Brisbane might be getting there as well. Where even if you're on two higher incomes and you've got two kids and you haven't been able to save a deposit for lots of different reasons, investing in your education, investing in kids, traveling, starting businesses, just doing jobs that just don't pay, and the cost of living crisis. It's just really hard to get ahead, right, and save a deposit. And the amount of deposit you need based on prices is really hard, right? But if you haven't got any intergenerational wealth, and I definitely don't, but if you haven't got that, it's really hard to get that deposit together. And even when you do get that deposit, you look at a multiple of income around 4.5, 5 times your income. Families in particular who need 3 beds are really lacking options unless they want to move, an hour out from the city. And even that's a stretch, and it's using every single dollar of their capacity. And that sort of CBA's report saying it's really medium and higher incomes are in the market, and it's absolutely the case. And so I think Sydney is really suffering identity crisis right now, where it's losing its appeal to not just, lower income people who can't make a living here, but I'm talking now medium and higher incomes. And we're talking principals of schools who, and I just think, our key workers are really financially stressed. And if we start to lose them more and more, Sydney's going to really regret it. And so I'm fully supportive of what Chris Minns and the government's doing, and in trying to cut red tape and make development easier. And he has to be a bit heavy-handed, because if he doesn't, it's going to be status quo. What's happened in the past, NIMBYs are going to win out. So that's my. It's getting more and more of an issue, Pete, I can see with clients, and I think Sydney really has to deal with it.
I think you're right. I mean, this is really a fallout from the pandemic, isn't it? There's been a couple of impacts. One is construction costs are really high now. So at the bottom end of the market, the most affordable end of the housing market, that's really, really struggling from an affordability perspective. Housing affordability was previously only this bad in 2007. And then we got a whole salvo of interest rate cuts, which improved things 2008, 2009 and beyond. But now we're back to where things were. I think the other thing is that rental affordability for households over time has really deteriorated for the most affordable end of the market and for the median end of the market. So, those are two things that are really a direct impact from the lockdowns and the border closures. We've had this kind of, you'd expect a bullwhip effect. You shut everything down and everything reopens. And that's been the problem, is that the demand for housing has changed really quickly. The supply is struggling and the costs are very high. I think, that's one of the things when you look through all of the figures, housing approvals, new home sales, what Charter Hall was saying this week is that Sydney is the laggard. I think new housing construction will pick up in 2025 across most parts of Australia, but Sydney's just stuck. I think it's just land prices are too high, construction costs are too high, developers are just not seeing the benefit in starting a new project. They're just not stacking up. So I guess this is one of my sort of calls for the next few years, and you can put me on fool or forecaster if I get it wrong, but I would expect over the next few years there'll be a real crisis of housing shortage in Sydney, because nothing is really coming through at the moment, and the borders are open. And just down there last week, you could just see how busy it was. It's just teeming with people. So lots of challenges for housing supply in Sydney. So those are probably the big 3 news stories this week, but there's always plenty more next time around. Come and join us on the Rask Community Forum, by the way, community.rask.com.au. What have you got planned for this weekend, Chris?
It's interesting. A friend basically has done this Winter Wonderland in Sydney, and we're going to go check that out on Saturday and then head up to Newcastle on Sunday. Might have to go and get a swim in at Merriweather Beach. I can't not go there when I go to Newcastle. One of the best beaches in the country. I've sort of spoken like a true Novocastrian there, but yeah, I think that's our weekend, Pete. And yeah, we're going actually on a bit of a road trip in about 3 weeks. So yeah, getting the team through to Christmas and going to enjoy a bit of a nice break cruising down the coast. We're actually going to Malakuta. I don't know if you ever know where that is, but that's interesting. We actually bypassed that last time. So I'm looking forward to the drive down there and camping on the Great Ocean Road by a river at the Cumberland River Park or whatever it is. Looks like a pretty special spot. So yeah, what are you doing over the Christmas break, Pete? I'm already thinking about it.
Yeah. Well, this weekend
Malaysia.
we've got a prelim final for AFL Women's. So Brisbane, we're going down to Springfield for this weekend. But yeah, we're getting to the cutting edge of the season now, so that's a must win. And then I'm going to Malaysia actually in December. So yeah, talking about expensive housing markets and more affordable markets. I noticed Merewether and Umina Beach, two of the top performers over the past 25 years. I was just doing some research for a client last week. But yeah, there's not many places in Asia now where you can say you get real value for money versus what you get. And Kuala Lumpur, Penang, those kind of areas are pretty popular with expats. So yeah, that's where I'll be hanging out over late December. So I'll report back with any news from over there. But yeah, it's AFL this weekend. So fingers crossed for a Lions win.
Let's get a little global story in our conversation next week, because I think Australians think it's just an Australian problem, but it's a global problem when you talk about housing markets. So let's have a chat about that next week. Good to chat as always. Happy Sunday. Thanks for listening, everybody. Send your questions in. Pete's in the show notes. I'm in the show notes if you want to have a chat, and happy Sunday.
Cheers. Thanks, everyone. Thanks, Chris.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.